I've always been the kind of person who believed in the possibility of striking it rich overnight. You know the type, eager, hopeful, and sometimes a bit too impulsive. I had heard countless stories of people making a fortune in the stock market or through groundbreaking startups. So when the opportunity came knocking, I was more than ready to answer. It was about a year ago when I first came across an investment opportunity that seemed too good to pass up. The company was a hot new startup, buzzing with potential and promising revolutionary advancements. I dove headfirst into research, scouring through articles, watching interviews, and analyzing market trends. Everything pointed to a golden opportunity, or so I thought. The decision was made. I was going all in. I invested $10,000 into this promising venture, convinced that this would be my ticket to financial freedom. The initial days were filled with excitement and anticipation. But as the weeks went by, reality set in, and my journey took a sharp turn. For the first few weeks, everything seemed to be going according to plan. The company's stock price was rising steadily, and my investment seemed to be growing at an impressive rate. I felt a rush of euphoria. This was it, the moment I had been waiting for. My confidence soared, and I began to dream about what I would do with my newfound wealth. Maybe a vacation in the Caribbean, a new car, or even a cozy house by the beach. The optimism was intoxicating. I began to share my success with friends and family, and their admiration only fueled my excitement. I was on top of the world, believing that this was the beginning of something extraordinary. But as quickly as it began, the upward trend started to falter. The company, once hailed as a beacon of innovation, began to face unexpected challenges. There were regulatory issues, management shakeups, and financial discrepancies that began to surface. The stock price, which had been climbing steadily, now started to dip. I brushed off the concerns at first, attributing the fluctuations to market volatility. After all, every investment has its ups and downs, right? But as the weeks turned into months, the situation worsened. The stock price continued to plummet, and the company's once promising future seemed to unravel before my eyes. One fateful morning, I woke up to find the stock price had dropped significantly overnight. My heart raced as I scrolled through financial news, only to find headlines about the company's mounting troubles. The initial shock was overwhelming. I felt a sinking feeling in my stomach as I saw the value of my investment diminish rapidly. I tried to stay optimistic, hoping that this was just a temporary setback. But deep down, I knew that the situation was dire. I spent hours glued to my computer screen, trying to find any glimmer of hope or positive news. But the more I searched, the clearer it became that my investment was in serious trouble. The inevitable happened. The company declared bankruptcy, and my $10,000 investment was essentially wiped out. I stared at the screen in disbelief, trying to process the magnitude of the loss. It wasn't just about the money. It was the dreams, the plans, and the confidence that had been shattered. I remember sitting in my living room feeling completely defeated. I had invested not just my money, but also my hopes and dreams. The loss was more than financial. It was a blow to my self-esteem and a harsh lesson in humility. In the days that followed, I found myself grappling with a mix of emotions. There was anger at myself for not seeing the warning signs, frustration at the company for not living up to its promises, and a deep sense of regret. I questioned my judgment and wondered if I had been too naive or too impulsive. I began to delve into the details of what went wrong. I read through old research notes, reviewed financial reports, and even reached out to other investors who had faced similar situations. It was a sobering experience, but it also became clear that I had missed several critical red flags along the way. As painful as the experience was, it provided invaluable lessons that I carry with me to this day. Here are the key insights I gained from losing $10,000 in that ill-fated investment. Do thorough research. I had relied too heavily on initial hype and failed to dig deep into the company's financial health and long-term viability. A thorough investigation into a company's fundamentals can provide a clearer picture of its potential risks and rewards. 2. Diversify your investments. Putting all my money into a single investment was a significant mistake. Diversification is crucial to mitigating risk and protecting your financial health. Spreading investments across different assets can cushion the impact of any single failure. 3. Prepare for volatility. The stock market and investments are inherently volatile. It's essential to prepare for the ups and downs and have a strategy in place for handling market fluctuations. Emotional reactions can cloud judgment, so having a plan helps in making more rational decisions. 4. Manage your emotions. Investing can be an emotional roller coaster. The excitement of potential gains and the despair of losses can lead to impulsive decisions. Learning to manage emotions and sticking to a well-thought-out strategy is key to long-term success. Learn from your mistakes. Every setback is an opportunity to learn and grow. Analyzing what went wrong, understanding the factors that led to the loss, and applying those lessons to future investments can help in avoiding similar pitfalls. Losing $10,000 was a hard lesson, but it ultimately reshaped my approach to investing. I became more cautious, more informed, and more strategic. I started to focus on building a diversified portfolio and adopting a more disciplined investment strategy. I also realized that financial setbacks, while painful, are a part of the journey. They offer a chance to learn, adapt, and improve. I began to approach investing with a healthier mindset, understanding that success doesn't come from chasing quick riches, but from thoughtful planning and continuous learning. Looking back, the loss of $10,000 was a significant and challenging experience. It tested my resilience, humility, and ability to adapt. But it also provided invaluable lessons that have shaped my approach to investing and financial decision-making. I hope that sharing my story helps others navigate their own investment journeys with greater insight and caution. Remember, investing is not just about making money, it's about making informed decisions, managing risks, and learning from every experience. Thank you for joining me on this journey. If you face similar challenges or have your own stories to share, I'd love to hear from you. Together, we can learn from our experiences and strive for smarter, more informed investing.